Tonight I want to show you why an $18 target is still possible, but just wait up. Go ahead and validate with me, right? So what is up, you guys? Thank you so much for stopping by once again on this happy Tuesday, Taco Tuesday. Before we get started, please make sure to subscribe to the channel, like the video, and share the video with a friend so that you and them could consider joining our trading community in Discord called ARCa Bull. Sorry. Let's go ahead and dive right into the charts. Okay, so first of all, I'm getting a lot of questions regarding this, a repeated amount of questions regarding why did I change my mind over the $18 target. Guys, I didn't change my mind. In fact, the $18 target is very possible still, but I want to show you something very clear. As you can see here, there is no price action, right? But you still see my notes. Well, let's just go ahead and show you the backlogs. Here is my YouTube video from, let's see, Monday, March 27th. You can clearly see all the price action there, right? Here is the dinosaur right at around August 9th, 1994, where the price action actually started, right at my cursor from my mouse, right? So you can see that there's a lot of price action there, of which I actually took note of after they added the price action back into the chart. And why am I saying after? Well, take a look at this release. Okay, so this is another one of my YouTube videos that I uploaded 3 months ago. Please notice that on the same 3-day chart, right? Let's go back. This is still the 3-day chart, the very same one. So GTII 3DB, right? So let's go ahead and right here, GTII 3DB. Okay, so please notice the dinosaur right over here near 2014. It's not 1998. The dinosaur in TradingView displays when the trading started for the asset. Okay, so this is where you see it here. And then moving forward, then you see that the dinosaur magically changed to 1994. Okay, so the data, the statistical mean changes based on all of these iterations. Let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. There have been an additional 14 correct iterations via, volatility versus momentum. Okay, so that added an incredible amount of information. This is not something that is my opinion. I don't think about. I'm not telling you something that is based on me. It's just the mathematics say what they will, and I will tell you what they say. It doesn't matter what I think. It doesn't matter what you think either. It's the math is there. You go do it. It's right there. These are the indicators. They're free. You can go ahead and do them for your damn self, and you'll see that that's the freaking number. The numbers don't lie. People do. That's the bottom line truth here. All right, so that's my proof to you. Real fast right here. You can see the dinosaur here on the 3-day chart, 2014. Very clear, not the case, right? So please notice the dinosaur here, 1994. Price action all there. Let's go back to my chart now and look at what magically happened again. We have the dinosaur back at 2014. Why is it back at 2014 when we have all of this all the way back to 1994? That's not, yeah, you can call that potentially manipulation. I don't know. You can call it whatever you want. It doesn't matter to me, but I got the data. I definitely got it. As soon as that price action was available, I'm good. All right, so now, why is that $18 target still possible? Well, the reason, first of all, that I changed the target to $9 or $10 was because of the statistical backtest. Because I'm not just going to give you an upside target based on a formation that's actually backed by only psychology. My strategy itself involves psychology and mathematics together. So I will naturally favor my system. So if my system includes psychology and mathematics, I'm not going to continue telling you that the target is going to be so-and-so when one key component is removed from my system. I'm sorry. You can go ahead and continue believing all you want, but that target is still possible though. And now how is that possible? Well, let's go ahead and touch on the psychological component of that. Okay, so the reason why I was ecstatic to show you guys the $18 target before was because the statistical backtest, which was with limited information, right, that suggested a 3,000% move to the upside. But with the addition of all of the extra data that we have right over here, that all changed the statistical data set, okay? So that now turned into 971% to the upside, which is still very confluent to the very top of our resistance here, okay? Now, let's go ahead and take it to note what that $18 target could be, right? Or why. So let's do it like this, okay? You guys check this out. Through a psychological component, right? This is a right-angled triangle, okay? So it's funny is because when we were here at around a buck, I mentioned to everybody that that we could be facing a bottom side of about 43 cents to about 60 something cents, right? 65, sorry. There we go. So of which we faced a bottom, from this particular iteration here, about 70 cents. Okay, so yes, I was wrong by 6-7 cents. It doesn't matter. But my point is that when we were up here, I was saying, yeah, we're looking very good, but we're gonna go to the downside first before we try to break out. And this line here, this white line that you see right over here, is still right where I left it the last time. This is where I left it the entire time. You guys can go and check your videos, check my videos. They're all there. My backlogs are there for you to see. Go ahead and you make your notes to see how consistent or inconsistent I've been. You'll be very surprised. All right. So it's not up to your words to say it. I don't care about your words, and I don't care about what you're telling me regarding the charts don't matter. Man. I would like for you to express to me just how you back tested that. Who told you? Like and it keeps on coming up, but yet no one back tests it and no one gives any tangible evidence that that is the case. When I continue to show you, you over and over and over again, that it does matter, right? Funny that even AvidTrader just put up a comment or a tweet, right, saying charts don't matter, but he nailed it right on the dime, right, with his chart. So, I mean, come on, you guys, the two very distinct traders here facing the same issues. Like we're both really facing this same issue. People saying that the charts don't matter, people saying, oh, they're FUD and stuff. Guys, it doesn't matter. We're not here to give you financial advice. I'm here particularly to show you what the math is saying. That's what I'm doing. That's what the math is saying. It's not financial advice. It's actually mathematical. All right. So anyway, yeah, the $18 target, right? So let's go ahead and dive right into that. So let's go ahead and take a trend line right at the top of the triangle itself, right? We can take it all the way to the bottom side of the triangle. This is the hypotenuse from a right-angled triangle, or in the trading world known as a descending triangle, okay? So now we can apply this to a breakout point. And what would that breakout point be? Well, it would be the first candle that we broke out of, right? So let's go ahead and take it to that point. All right. So now we can actually see, and this is the way that you trade a right angle triangle in a discretionary / psychological manner. Okay. So what is that target telling us? Well, the target is telling us that it could be about around 23 bucks. Okay. So that's why I'm telling you that there is still a way to look at 18. Now, please notice that there are two areas here of support, and they are in fact valid. Okay. I needed the two areas of support here because of historical supports. Okay. So let's go ahead and now take a trend line to the top side of that support line, right over here. So now let's apply it to the same place. Okay. Now, right over here, right from that same breakout candle, where does that take us to? Well, that takes us to 1709, 1734, right about there. Okay, so that's why I'm telling you that the $18 target hasn't disappeared. It's still there. The only reason why I'm changing the 18 to the $10 target, please, I still have the backtest. Okay, I still have it. Let me see if I can actually pull it up for you. Zoom out as far as I can. There it is. Okay, so this was a total of 11 iterations throughout the entire quote unquote the quote unquote entire trading history of the GTII asset on the 3-day chart. So we had an average upside accuracy of 68.63%. Right? Meaning that the accuracy based on the signals, on the conditions based on volatility versus momentum, they gave us an upside accuracy of almost 70%, which is not bad. You know, it's not perfect, but it's good to consider. It's way more than 52, right? So now, based on those iterations, the total 11 iterations, right? We have a total upside mean of 3,247%. But now, since we got all of that extra data all the way over here from when we didn't have that data, please look right there, the freaking dinosaur in 2014. Okay, now notice the damn dinosaur over here in 1994. Okay, so that's why. All right, so please go ahead and now notice the difference. Okay, so now it's 31 iterations, not 11. Okay, so that gives us now a slightly less advantage. 67 spots, 74%, opposed from the 68. Giving us an average upside accuracy of 971 versus 3,200. Guys, this is, I'm not making this up. It doesn't matter what I think. It really does not matter. The existence of ARCa here, of me, doesn't freaking matter because the math is there. The math is telling you, not me. I'm merely the freaking paper boy. That is all it is. Okay, so the target is absolutely possible. 18 bucks. Yeah, but the thing is that, guys, in my personal system, I value when we have correlation or we have confluence between a psychological component and a mathematical probability. So what GTII essentially did, or whoever the market maker or whatever catalyst it was to remove all that information from 2014 all the way to 1994. I mean, guys, count the years. I mean, goodness gracious, that's a lot of information. That's a lot of data that we freaking never had, right? And now for some reason, it's gone again. and here's the stupid dinosaur again in 2014. Why the hell is it in 2014? You know, so guys, I'm telling you, I really don't know why that's happening, but it could be, could be nefarious. We don't know. All right. But that's the bottom line, guys. That's the bottom line. It doesn't matter what I think. It doesn't matter what you think either. You really just have to kind of trust the math here. That's all I'm saying. All right, you guys. So my system really requires for us to have a mathematical backing. A mathematical backing, like the stochastics momentum versus the volatility, the backtest per that condition. Anytime that volatility has expanded into critical volatility with the contraction phase following it, paired with stochastic momentum with an upside pivot, and taking into consideration, I'm going to be very, very, very accurate here with you. Okay, so let's just go ahead and take a look at what I'm doing exactly. Okay, so the condition is not made up either. Okay, please notice the accuracy in where I'm measuring. I'm just going to take a random number. Please notice that the wick high is right up here, right there. Okay, so literally right there. Okay, so suggesting 455. You can look at it right over here on the H, right? So look at the candle, 455, right? Look at my drawing right at 455. Okay, so I do opening of the candle. So on an opening basis, meaning right at the opening of this candle right here to the wick or range high of the signal. So that means that the highest potential from the starting of a contraction phase with an upside pivot of stochastics. Okay, so that is the condition that I take, and I'm the very, very, very critical with how precise I measure this. I am not by any means making this crap up. Okay, so please you can go back as far as you want over here, guys. I really take into consideration deep, I'm talking about seriously deep validation here, okay? Please notice that this candle range high right over here on the H again, right? On the H for high, O for opening, low, close. Okay, let's go to the H for high. All right, so here it is, hovering above the candle, 50. Look right here, 50. Dead on, okay? I take this incredibly seriously, okay? This is not a game. Okay, meaning that I'm not playing with you, okay, but we are playing in the markets. Okay, so this is the playbook. The playbook rules state, man. I mean, come on, guys. This is what it is. I'm a systematic trader. I am a systematic trader. Okay, I have a rules-based system. That's all it is. That's what I care about. I care about the system, and I care about the retail investors within this. But me covering GTII and me covering all these other assets may actually come to an abrupt end. I'm not saying this because of any spite or anything. It's just I think that retail deserves better. Actually, higher. Like we know, I'm talking about blue chip mathematical probabilities, right? Within IBM, American Airlines, Home Depot, that type of stuff, right? But let's move on with the analysis, guys. It's already going on pretty long, right? So GTII 4-hour. Actually suggesting to come back in to the 157 level to about 150. Okay, please notice over here that this descending channel also has 151 as the bottom side of the support of the, actually I could even be a little more exact, right? Just about right there. Oh, okay, 150. So 150 to come back and validate or revalidate the newly converted resistance into support. Okay, so it wouldn't need that because we actually fell underneath the support. Then we reclaimed the outside of it. It's only natural for us to come back to it and validate it. Okay, so now next chart, check this out. Where are we looking at? Right here, the NOT 618 at 156. Well, 156, because it's the golden mean, very nice. It rhymes with the 157 from the reversion variant mean of my algorithm. Okay, so it's also suggesting that. So very likely we can actually come back to that target and see if it can serve, or the pair of targets, right? See if they can serve as a good support. Please don't fear too much. If it is the fact that actually we wick down to about 140, then so be it. But this is kind of a demand zone. We could use it as a form of a bounce, just like we did here before a continuation to the upside, guys. But we have been talking about this too, okay? 4-hour bearish engulfing right over here, suggesting a downside continuation, and it succeeded. So the chart was right, wasn't it? All right, so let's continue on the analysis here. We're almost done with this, guys. So here is actually something that I wanted to talk to you about so that I can just kind of flex on you some more, right? So just to kind of give you guys just how far this thing can go into mathematics. So please notice right here that this is the 6-hour volatility versus momentum backtest, particularly from the 80 to 90% of expansion from the BBWP representing volatility, right? So this came out with 24 iterations, guessing an upside of about 80, an upside accuracy of 80%. The thrust came out to 100.542%. I have gotten really detailed with this, and in fact there was a couple iterations which were missed, but they were very small. They were like 4% and like 6%, so not too much of a difference here. But I wanted to kind of prove a point here and show you this. Okay, so now in order for us to kind of understand where the price action can go, then yeah, we can take every single iteration's upside thrust, the duration of the iteration, and the amount of times that the iterations were guessed, or volatility versus momentum were guessed correctly versus incorrectly. Okay, so now that we know that, we actually take the sum of every single upside thrust divided by the correct iterations, which is 24 out of 30, giving us a mean. That gives us the 100.542 as a mean. Okay, so I'm not going to sit here and actually explain to you how we can create a first standard deviation, but the standard deviation of 100.542% is 89.56%. Okay, now if we are looking at a bell curve, which is a statistical bell, I'm not sure if you guys are familiar with statistics or anything, but 68% of the results lay in the center. 68% of the results are 89.56%. Now, in a bell curve, you do have a low. So if you're looking at a bell curve like this, right, you have the lower end of the bell curve and the higher end of the bell curve that can give you a statistical probability, which is called the first standard deviation, higher end and the lower end. Okay, so let's go ahead and now look at the first standard deviation. The lower end is actually the mean subtracted by the standard deviation. Okay, so that gives us 10.9836%. That is based on the entire backtest here. The lower end of the first standard deviation is giving us a probable move of the smallest move of 10.98. Okay, so now the higher end is which is the mean plus the standard deviation, is giving us 190.10%, meaning that could be the highest that the price action can actually go. Okay, so please notice that upon the firing of the signal, We made a 30%. Actually, let's go ahead and correct that and just put it right up here. We actually made 36.86% out of the difference between the lower end of the first standard deviation and the higher end. Okay, so that's pretty fair. I mean, it's just those are probabilities. There's no way in hell anybody's going to tell you where it's going to go. So if you're looking here at ARCa for me to tell you where the hell it's going to land, then get the hell out of here, because I'm not going to be able to tell you that. No one will. No one will. No one will. No one will tell you that. No one knows. No one knows where it's going to be. All right. So just like that, no one knows. All right. So where's the $18 target? Now you know. Why did the $18 target change? Now you freaking know. Shut up and please, please, please trust the math. Stop trusting yourself and any other influencers. Don't even trust me. Go for your damn self. Do the damn work. Do it. Do the work and make sure that you can come back with a valid explanation, and stop saying that the charts don't matter. Quit that crap. Quit the crap. The charts exist for a freaking reason. That's why they're there. Is that so we can gain an edge over the trade. All right, you guys. So that is what I'm looking at for GTII. Very, very likely we are going to come down every single time frame, actually suggesting a downside here. The support could be found on the 12-hour chart and actually on the daily RSI. These are very indicative to potentially, maybe, finding a support from that area that we're talking about, anywhere between 150 to about 156 tomorrow. Let's go ahead and just keep an eye on that, guys, and see what's up. Please remember that I still have about 10 seats left in the ArcMasters trading course. Find the email in the description below and send me and shoot me an email, right? And we'll go ahead and get you enrolled. Please remember, first and foremost, that I'm not a financial advisor. Take whatever I do show and iterate within these videos as just a form of entertainment, as it is only meant to be taken in that way, despite the fact that I'm actually showing you mathematical probabilities, which automatically takes me entirely away from any type of financial advice. So good luck with that one. So please, please, please remember to do your own due diligence and everything will be okay, you guys. So this is public information. The back tests, the mathematical probabilities are absolutely there. There is no crime behind that whatsoever. Read your rules, read your laws. All right, you guys. So with that said, thank you so much for watching. I will catch you at the bell mañana. Peace.